Hello, I'm Leanne Spar. In this section, we will be discussing personal income tax. The specific objectives we will cover are: we will list the 4 steps that determine tax liability. We will find the adjusted gross income. We will know the standard deduction amounts. We will find the taxable income and income tax. We will list possible deductions, and we will determine a balance due or refund from the Internal Revenue Service. Income tax is a source of revenue for the federal government, and it's based on income. We're going to look at finding adjusted gross income and look at standard deductions. The 4 steps in preparing your income tax return. Step 1, you're going to find your adjusted gross income for the year. In order to do that, you're going to add all income and subtract adjustments. Step 2, you're going to find the taxable income. Step 3, you're going to find the tax. Step 4, you're going to check to see if a refund is due or if money is owed to the government. In order to prepare your income tax return, you need to know the standard deduction amounts. Standard deduction amounts are $4,750 for single taxpayers, $9,500 for married couples filing jointly or qualifying widower, $4,750 for married taxpayers filing separately, $7,000 for head of a household. Now let's find the amount of taxable income and the tax owed. Mr. Nation is married. He has 3 exemptions. He has adjusted gross income of the year of $143,420, and he has total deductions of $11,700. So let's first find his taxable income. So his taxable income is going to be $143,420. Subtract his deductions, $11,700. And we're also going to subtract for his exemptions. He has 3 exemptions, and personal exemptions are $3,050 times the number of exemptions. So we're going to subtract 3 times $3,050. So his taxable income will be $122,570. Taxable income, $122,570. In order to find his tax owed, we are now going to consult the tax rate table. Look in your tax rate table. In the tax rate table, we're going to look for married, and he is filing jointly. So his income will be over $114,650, but not over $174,700. So his tax will be $22,280.50 plus 28% of the amount over $114,650. So the tax owed will be $22,282.50 plus 28% of the amount over, that's $122,570 over $114,650. So we obtain $22,282.50 plus this value is $2,217.60. So the tax he owes for the year is $24,500.10. Now let's determine whether we have a balance due or a refund due from the Internal Revenue Service. We have Mr. Turner, who has a taxable income of $32,060 for the year, and he's had federal income tax withheld from his checks of $347.80 monthly. Let's go to the tax rate schedule and calculate his tax. You will notice that he is single. So we go to the tax rate schedule. We look to see that he is single. The amount on Form 1040, line 40, which is what we have here, is between $28,400 and $68,800. And so we use $3,910 plus 25% of the amount over $28,400. So the tax is $3,910 plus 25% of the amount, which is $32,060, over $28,400. This tax turns out to be $3,910 plus this value is $915. So the tax he owes the federal government is $4,825. However, he has had withheld from his checks $347.80 monthly. So the tax withheld is $347.80 monthly, which he has already paid $4,173.60 from his checks. So the tax due will be the amount he owes, which is $4,825, subtract the $4,173.60 that has been withheld from his checks, and he must now write a check to the Internal Revenue Service of $651.40 for the year. In this section, we have discussed personal income taxes. Everyone who has income must pay income taxes. It's something that we have to practice. So make sure that you work with these problems, work with the tax rate schedules. Make sure you know the terminology involved so you can be prepared when you have to prepare your own tax form.